Good morning. It is Monday, April 8th, 2024. It's just before 10 a.m. on the East Coast. This is Rob Sin at CEO Technician on X, at Goldfinger on CEO.ca, and Goldfinger Capital on YouTube and Substack. As usual, a lot to get to today. I want to start with humility and market expectations. So, just speaking for myself, the last 6 weeks have been very good in the market, um, seeing the market well, positive feedback in the form of P&L. And I think a lot of people that watch these videos have done well in 2024 so far. Um, so this is a reminder to keep your feet on the ground, to remain humble, to practice humility, and you know, market expectations. So whenever we have expectations for something in life, we risk being badly disappointed, especially when we have expectations for things that are completely out of control, like financial markets, like a stock price, like the price of gold, right? We just have no control over these things. So it is much better to be unattached to those outcomes, to be a passive observer, in control of my emotions, my well-being, my peace, and allow all those external things to just happen. And I'm just observing and analyzing them, but I'm not attached to them, right? The root of all suffering is attachment, attachment to other human beings, attachment to different outcomes, attachment to the numbers in a bank account, the car that we drive. Um, that's the root of all human suffering, right? So a reminder to remain humble, and also a reminder to accept the risk that we're taking in financial markets, okay? And the Mark Douglas quote is very important. If you are unable to trade without the slightest bit of emotional discomfort, specifically fear, then you have not learned how to accept the risks inherent in trading. Um, when we have fear, so fear comes into financial markets all the time. It's usually fear of loss, but it can also be fear of missing out, right? Something's going up, something's happening, and we need to participate in it because it's happening, right? We want to be part of it, right? So fear is the root of a lot of human failures in financial markets, right? So we have to conquer our fears, accept the risks inherent in trading. And this is specifically relevant. Let's say junior mining, you have a stock, you have a position and you're really optimistic on, and you believe the share price is going higher. Okay, that's great. And the market won't always agree with you, at least not on your time frame. It may take much longer than you thought possible. Also, the share price could go down, right? It could go down a lot. Are you fully accepting the risk of loss? Are you acknowledging the possibility that maybe the way you have it is not right? Okay, it's not the way it's going to happen. So these are important topics. These are important topics. And when stock prices are going up, like, I could flip through some of these charts I have up here. We've seen some big moves in the last month, right? When stock prices are going up, people start to get very confident. They start to get overconfident and they start to forget that stocks can go down. All right. And I'm saying this as a reminder, important one. It's not like me saying, okay, I think stocks are going to drop today, but it's a reminder that it could happen. Anything could happen, right? And this is one of his 5 most important rules of trading, Mark Douglas Trading in the Zone, is that anything can happen. So as a trader, as a market participant, you need to have that mindset, the mindset that anything can happen, and be relatively unmoved when anything does happen. Anything and everything could happen. And how are you going to handle it? Are you prepared for it? Are you accepting the risk of the positions that you have on, right? And then gratitude, right? So saying a prayer, saying a prayer before we eat, that's a very humbling expression of gratitude, thankful for the life that food gives us, the nourishment, the abundance that's all around us. Like a lot of us, especially like in the West, we assume, we take for granted food will always be there. Food, water, power, transportation, it's always there. It's ubiquitous, right? So we lose sight of the miracle that's around us, the abundance that is everywhere. And so this is a reminder to humble yourself. Be thankful for every little thing, every little thing. And when you make money in the stock market, that's the icing on the cake, but that's not the cake. That's not the cake. That's not fulfillment. It's nice, it's fun. I like to be right as much as the next guy, but there's a lot more to life, right? So be thankful for the abundance and the love in your life and never forget it. All right. Little spiritual mindset talk. These things are very important. I mean, honestly, I think what I just said, frankly, is probably more important than everything else I'm about to say. But y'all tune in for everything else. Skip past this part. Oh, he's on that spiritual talk again. Anyway, so metals are roaring. Holy cow. I don't have the futures quote though because I don't want it to distract me while I'm doing this. But gold's like 2350. It hit 2372 overnight. Silver was above 28. I don't know what it is, 2750 now. Whatever. Metals are moving, guys. Metals are moving. Few comments about this. Okay, so first of all, when we're talking a market like gold, we need to be clear on our time frames. This is the monthly chart. This is a powerful, powerful breakout on the monthly. This pattern, this cup and handle pattern, this, you could call it an ascending triangle, has resolved higher. This little handle this little handle that took a few years to build out has resolved to the upside. The cup, the saucer is just absolutely massive, right? This is a powerfully constructed pattern. Gold has broken out from it, right? So we can project out into the future 2500, 2600, 2700, etc. But we have to also be cognizant of different time frames. And, you know, on shorter time frames, gold has had a very aggressive move, which is very bullish, bigger picture. This is a powerful breakout. But we also have to realize that sometimes markets can move too far too fast. And gold is getting to that. It's getting to where I'm a little concerned in the near term here. I mean, 2372, we were just at 2160 a couple weeks ago. I mean, this is big. It's a big move. So let's not get too cocksure. Let's not get too overconfident. A correction could happen. It could drop $100 tomorrow. Okay. And we'll get into that a little bit later. But the fact that gold is correlating positively with rising treasury yields, whoa, that's something new, right? Like this is a major trend in character, change in character. A powerful new trend is forming, and frankly, this is incredibly bullish, right? But we need to be clear on our different time frames here, and not get too greedy in the short term. Silver, an extremely powerful breakout above that $26 mark. Um, That $26 mark has been resistance for what feels like forever, and silver just busted through it like a bull crashing through a wall. And yeah, it's super overbought, right? It's been a powerful move. It's super overbought, but this is bigger picture. This is extremely bullish, and in the near term, and this is why you would never short a chart like this. You never think about shorting a chart like this, because it could work off the overbought condition just through time. It could go sideways for a week, right, and sort of reset some of these oscillators. Um, the trend is your friend. Stick with the trend. This is extremely bullish action in metals across the board. Copper. So this is weekly copper chart. So gold all-time high, silver breaking out to like a multi-year high. Copper's still where it was a year ago, right? So this is still very early in the move in copper, and this is a very nice form, rounding bottom pattern that formed throughout 2023 and the early part of Q1 2024, right? And now all of a sudden, copper is positively correlating with higher treasury yields, right? So this is a reflation trade, a China growth trade, China stimulus trade, call it what you want. And this is a report from JP Morgan. Um, Battery EVs, we're going to need a lot more copper. Renewable energy, so that includes solar, that includes wind, that includes electric vehicles, all of it. Copper is integral to all of it. And solar doesn't really work without building out the power grid. And that requires a boatload of copper wire. Okay. And then AI demand. Oh, this is another aspect of copper. Data center power capacity. Every megawatt requires 20 to 40 tons of copper. And look at these numbers, right? So it's just, this is starting to become mind blowing how bullish this situation is for copper. What could derail this? Like, what could cause copper to fall back? Well, there's a few things, but probably the simplest one would be a recession. So the economy does finally keel over, but that doesn't appear to be what's happening right now. And then of course, like there's the possibility, oh, the Fed suddenly has to hike rates because inflation is rebounding too much. But that's a very unlikely scenario. And there's probably a lot of reasons why the Fed wouldn't even do that, right? And well, that's beyond the scope of this current conversation. But copper looks extremely bullish. We've been pounding the table on copper for 6 months. We've been right on, and we continue to be right. And there's no wavering from that longer term view. If copper drops to 410 tomorrow, that doesn't change anything about my longer term view. The same thing if it goes to 440 tomorrow, doesn't change my longer term view. We could still see visibility to $6-7 copper out a couple of years from now. Let's go through some charts. So breakouts all over the place in mining stocks, and then we'll talk about my Substack articles. Copper. So agricultural commodities. Wow. A lot of this is cocoa, coffee, but agriculture is rebounding. So this is characteristic of an inflationary rebound. Higher gasoline prices, higher food prices, higher copper prices, um, stock market very high, right? This is not deflationary, that's for damn sure. Oil services, oil, man. There's one big regret I have in the last month. It's this chart. I wanted to be long this heading into April, and I just wasn't willing to chase it, and I've missed it, just flat out missed it, right? So sometimes when a market is trending so powerfully, you just have to just get in. It's not going to give you that 3-day perfect pullback to buy at exactly your price level. When it's really bullish and the trend is so strong, you just got to get in. But that being said, if I wasn't willing to buy it at 320, I'm sure as hell not buying it at 350 right now. Still on my watch list, but right now I'm just on the sidelines, right? CDE core mining, another breakout mining chart, and all of our gap fill fanboys will, remind, oh, there's a gap there, it's got to fill. Okay, maybe, but when? When? I mean, it could be a year from now. Or this could be a powerful breakaway gap that just silver has detached from this range, and this is a new paradigm, right? I don't know. We don't know, but it's a breakout chart. Agnico Eagle, number 3 gold producer, breakout chart, 52-week high. I am gold, mid-tier gold producer. We've been all over this one for many, many months, and this is a big, big win. And it shows a very similar breakout gap. In fact, 2 breakout gaps like we see in the CDE chart. So there's just breakout charts all over the place. Newmont is suddenly a breakout chart. Um, hit 40, hit 40 this morning. Okay. What I do want to say is these charts are great. Their bigger picture very bullish, but near term, the miners are getting a bit stretched. Okay, they're getting a bit stretched to the point where I would seriously recommend taking some profits on some of these moves. I mean, if you caught Newmont from 34 to 40, ring the register. Okay, these are still mining stocks. These are still companies that have operational challenges, that have cost overruns. It's not like everything is cured overnight by a 10% move in gold and a 20% move in silver. It certainly helps. It helps these companies a lot, but still, mining is a tough business, and these stocks have now officially had a big move in the last month. Freeport McMoran, another one we've been pounding the table on for months, up to 50 this morning. 50. And this is like a $50 billion market cap company. So this is a major revaluation underway. But let's zoom this out and look at the bigger picture here. Okay, it looks a lot different on a 3-year time frame, right? So, hey, yeah, I mean, it could consolidate high 40s, 50 for a little bit, but bigger picture, this could still go well above 50. Okay, very large copper producer, very well run company with a lot of gold as a kicker, right? So it's kind of like you get the sweet spot here of copper and gold with Freeport McMoran. Lundin Mining LUN on the TSX. This is a hell of a move. Okay, this is another copper producer. Um, you get a lot of copper exposure here, and the market wants to own this thing. The market wants to own this thing. It's just as simple as that. Um, Guanajuato silver and gold producer in Mexico. I spoke with the CEO, James Anderson, on X last week. They just announced on Friday record quarterly production, about 1 million silver equivalent ounces per quarter at Guanajuato Silver. Still need to see their financials and get their updated costs. But this one obviously has had a very big move. It's basically a double in the last month or so for Guanajuato Silver. And, he basically said, look, $27 an ounce silver is a major game changer for us. It changes everything, but let's see if this price lasts, right? It's just been a couple of days. Um, so that's definitely one to watch and dig into further as we get more filings from them. Outcrop silver and gold. So this is a silver explorer with a very high quality, high grade silver vein field in Colombia. And they're about to get started drilling. The project is called the Santa Ana Project. And look at the volume just pouring in here. So this is one of those silver explorers that the crowd is gonna start to really pile into if this silver move is for real, right? This is um, really high quality silver project. They just need to drill it more and prove the scale. Right now, it's about a little less than 40 million ounces of silver in resource, but the project is really big. There's a lot more veins that need to be tested and drilled out. And so they just need to do that drilling. Takes time, takes money. You know the story. Banyan Gold, BYN, Yukon Gold Explorer, with now 7 million ounces of gold in an inferred resource. I feel like the market has just kind of forgotten about this one. The company's been kind of quiet. It's a Yukon company, so it's not really seasonal, but obviously they do take the winter off from drilling normally. But things are just about to get going again in the Yukon here very soon, and the market's just kind of forgotten about this one, which is interesting because 7 million ounces of gold, right? So I think one of the objectives for Banyan in 2024 will be to um, focus on some of the higher grade areas of Ormac and maybe get some of those gold ounces up to the measured and indicated categories, right? So higher confidence of those higher grade zones at the Ormac project. ARIC Awale Resources, ARIC, on the venture, they announced just on Friday that drilling has resumed at the Charger target at the ODNE project in Ivory Coast, West Africa. A lot of people will look at a chart like this and be scared as heck of it because of how aggressive this move has been. But the reality is this is what a new discovery chart looks like. Okay. This is what a new discovery chart looks like. And the fact that it's consolidated so well between 75 cents and a dollar for the last week or so, I think bodes well for this one. I am long. I am long Awale. I am long Banyan, and I am long Fireweed metal. So this one was one of the companies I highlighted in my presentation at MIF, the Toronto pre-PDAC MIF, early March. And I was basically saying this is the time to get into Fireweed before the news flow really kicks up in May and June and throughout the summer. We're going to get an updated resource from the Mac Pass project. We'll also get a PEA for the Mac Tung project. Tungsten, a metal that not many people know much about, but it's an important metal, especially for military applications. Um, and this one is it's completed this rounding bottom pattern and begun to move up. I really, really like this one. And this is so, Lundin Mining, for example, has had a big move already, right? It's already broken out, right? Fireweed, this is still early, just completing the basing pattern early. So I'm trying to show a little bit of both, some big breakout charts that have had big moves, and then some that are kind of still waiting to take off. Okay, so Fireweed is one of those. Substack. So last week you got a few, well, yeah, two articles really last week. Precious metals, roar enter nirvana. Um, and one of the points of this post was that a lot of people are having trouble explaining this move in gold and silver and what actually changed. What changed, recently to cause these moves, right? And that's a good question to ask. Um, the Fed hasn't cut rates yet. I think For somebody to say the reason why gold has moved is because the Fed is going to cut rates, that's a very lazy explanation, and I don't think that's accurate. We don't even have certainty when the first rate cut is coming. So just because it might be coming doesn't mean that's a catalyst for people to throw money into gold. And even after they cut once, there's no guarantees of how far they'll cut or how fast they'll cut. So that's kind of crazy, right? I think a lot of it is has to do with this comment by James Thorne of Wellington Altus in Toronto. The Fed has no choice. If rates are not cut, we get a financial crisis. There is too much government debt. So you could also say, well, if rates are hiked further, we get a financial crisis. There's too much government debt. We now live in an era of fiscal dominance. The term fiscal dominance refers to a situation in which the government's fiscal policy significantly influences or dominates the monetary policy set by the central bank. So the Fed is no longer really fully independent. The Fed is working for the Treasury to help finance the US government. And this starts to occur when a government's debt level is so high that it restricts the central bank's ability to control inflation through monetary policy tools, such as setting interest rates. And that's where we're at, right? That's where we're at. And the possibility of a failed bond auction is real. Okay. And then gold and economic freedom. So I was reminded of this, I guess, article or thesis written by Alan Greenspan in 1967. So this is way before he was Federal Reserve Chairman. He was still an academic, and he wrote an essay titled "Gold and Economic Freedom," and it is excellent. It's only 5 pages, so it's must read. And he talks about the financial policy of the welfare state requires there be no way for owners of wealth to protect themselves. Deficit spending is simply a scheme for the confiscation of wealth. Gold stands in the way of this insidious process. It stands as a protector of property rights. This is profound because this rings true. This reads as truth. And he didn't say things like this when he was Federal Reserve Chairman because he had different responsibilities, and different objectives, right? When you're a poor academic, it's much easier to speak truth than when you're not so poor and you may be heavily influenced by different parties and special interests, if you know what I'm saying, right? So this is beautiful. This is beautiful. And I had read this a long time ago, but it didn't hit me the way that it hit me last week. And this is particularly relevant today because of the deficit and debt situation in the US. Um, the deficit spending is out of control. And I think it's gotten to the point now, the US has been kicking the can for 25, 30, 35 years. Okay, it's been kicking the can for a long time, and it hasn't paid a high price for that yet. But eventually the price has to be paid. We just don't know when and what that looks like exactly. But it feels like we're getting to a very critical moment in time. And I believe that gold, um, what is the message gold is sending? I believe that gold is sending a message here of a central bank policy error and a trapped Fed that is brought to its knees by fiscal dominance. Okay. I believe that the policy error has already probably been made, and the market is concerned there's going to be more errors coming, or that the Fed is just so trapped there's no good alternative. Like there's no good move for it at this point. It has to sacrifice something. Um, Gold is absolutely sending that message. Okay. And then you could also talk about China and China's stimulus and China gold being transferred from west to east. These are all factors. It's not just one factor that's driving gold. But 21 billion of T-bills have been issued in the last 12 months. I mean, this is explosive, right? I mean, if this was a stock chart, it's a breakout parabolic stock chart, but this is the treasury financing itself at the short end of the yield curve, short-term paper. Um, and at 5.5% Fed funds, the weighted average cost of capital on this $21 billion is pretty high. It's pretty high. I mean, it's probably close to 5%. Um, because we've been above 5% for a while now, right? And it's constantly recycling this. Um, so that is very problematic. That is increasingly problematic, and a factor that is having the market lose confidence in the Treasury's ability to refinance itself through normal means, so non-Fed monetization means. And this is interesting because these next two charts, so automobile loans dropping through the floor, and then the top 1% of earners in the US now have more wealth than the entire middle class. And just look at how this is the middle class in decline, and this is the 1% in ascendance. And I believe that all of this kind of goes hand in hand, because the wealthy, the ones who have the wealth, who have hoarded the wealth, they actually benefit from 5.5% Fed funds rate. They benefit from the current financial market environment. They're making money in the stock market. They're making really high yield on their bond holdings, and they're unmoved by banks tightening their credit standards because they don't need to borrow money from banks to buy a car. The working man, the middle class, the lower class, the poverty needs, the impoverished need to borrow money to start small businesses, to buy cars, to do all kinds of things. Um, and so this is twofold, I believe, on this chart. This is tightening lending standards. We've seen a lot about that. A lot of um, lenders have left the auto loan market in the last year. So there's fewer lenders, they're tightening standards, and used car prices are dropping actually. So there is multifaceted. What is this chart is multifaceted. It's telling a multifaceted story, but probably the biggest one is that it's harder for the little guy to get a loan. It's harder and it's more expensive thanks to the Fed and tightening monetary policy, right? So the little guy gets screwed. The little guy doesn't benefit in any way from 5.5% Fed funds rate. Um, Food prices haven't dropped. Gas prices haven't really dropped, right? I mean, things are as high as they were a year ago. Um, but it's just harder to do things if you're poor or if you're middle class, right? So all of the wealth is getting concentrated in the top 1%. What can the Fed do? What can the Fed do here? If they cut rates really fast, the stock market's going to go even higher. The wealthy will get even wealthier. And we might have an inflation rebound that really bites, right? If the Fed hikes rates, then the stock market will crack, quite likely. And we'll start to see the employment situation deteriorate markedly, right? Because at this point, when the Fed has waved the white flag, we're done hiking. If they restart the hiking, it will be an admission that they fucked up and they don't have control of the situation, right? And so that will cause all kinds of other problems. Probably the best thing is for the Fed to sit pat for a little longer and wait, see what happens, right? So central bank gold accumulation continues. China's gold stockpile is up to 72.7 million troy tons, troy ounces, troy tons. 72.7 million troy ounces. I think about tons a lot, grams per ton because of mining. That's about $170 billion worth of gold at today's prices. It's a lot, but it's not as much as the U.S. have or has as the U.S. supposedly has, which is more than double that. Shanghai gold premiums continue to be high. I mean, we're talking about $25, $30 an ounce premium to get gold on the Shanghai Gold Exchange, right? So that is helping to drive gold from east to west because it's valued higher over there. And then the total amount of gold above ground on the planet, it's hard to get this number exactly, but let's just say it's about $15 trillion. Okay. So $15 trillion in above ground gold. So since the beginning of the year, gold is up more than 10%. I think it's about 12, 13%. So, we're talking about a not inconsiderable amount of increase in wealth for gold holders. We're talking about almost $2 trillion. That's a lot of money. That gold has gone up since the beginning of the year, almost $2 trillion more valuable for all that gold across the planet. That's significant. And what is that? What is that telling us? It's telling us that market participants on a whole are valuing gold more highly in fiat currency terms. So the currency is worth less and the gold is worth more in that currency. And there's a lot of factors driving that, but it's basically beginning, it's the chipping away of the full faith and confidence in the US Treasury and Fed to preserve the long-term purchasing power of the dollar, right? And we could talk about other currencies as well, also the yuan, the euro. Central bank, it's reduced faith in global central banks. Okay, it's probably the simplest way to say it. And rising, risks globally, plural risks. What is the bearish thesis on gold today? Because it's important to always think about what is the other side of my trade, right? So we don't want to just have blinders on and this could be the only way that it is. No, let's talk about what is the bearish thesis? Like what would cause gold to go back to 2100 potentially? Like what would have to happen for gold to drop 10%, right? Well, I think the first most likely thing would be just the Fed doesn't cut. But then in my next breath, I would say, is that even really bearish? Is that even really bearish? I'm not sure. Too far, too fast. That's a simple one. It's gone up a lot, so it needs to mean revert. Okay, that's very basic. Positive real yields, yes. 5.5% Fed funds, inflation somewhere around 3.2, 3.3. So yields are positive, but they've been positive, so that's nothing new. Um, and then maybe it's just maybe the most convincing one is just actually dollar strength. The US dollar stays really strong or strengthens further as the ECB cuts, Bank of England cuts, right? Other central banks cut, and the Fed stands pat. That increases the gap in the interest rates between the euro area, the UK, and the US, right? So the dollar would be preferred then as higher yielding compared to those other currencies. And um, but it's more complicated. Forex is even more complicated than that because then what is the real yield of those currencies? What's the inflation rate? But U.S. dollar strength as the U.S. economy remains robust and other global economies weaken further, in theory, that should be bullish for the dollar, right? So that's actually a bearish case for gold. Okay, the dollar is stronger than many, anticipate it being. But really, if I add it all up, the bearish thesis isn't terribly compelling. Let me know if you have a better bearish thesis, or like a factor that you would throw in there. Okay, a gold bear case. Nuances of riding a bull market. So let's say you have a portfolio of junior miners, and the last month has been very good for you. How do you hold on? How do you maximize the profits from this bull market, right? Because if we assert that this is month one of what could be at least a 4 or 5 month move, you don't want to get off the train too soon, right? But you also don't want to be too greedy and take on too much risk. So it's really important for you to be comfortable with the risk that you're taking and understand that to even just ride a 4 month bull, let alone, let's say, a 4 year bull, but a 4 month bull, there's going to be some sharp drops along the way. There's going to be times when your conviction is tested, your thesis is tested. And some of the bull market shakeouts, like in a real bull market, the shakeouts are vicious. Look at some uranium charts like CCJ in the last couple of years. It has had multiple corrections, 20%, 25%, but it came back every time, right? It came back every time, but it had some pretty good drawdowns, right? So you have to be mentally, psychologically, financially willing to endure the drawdowns, because they will come. The higher it goes up, the more vicious the shakeouts along the way are likely to be. Okay, so you need to really have a game plan, and only you can generate that game plan. I can't give it to you. You have to have your own game plan and make sure you're comfortable with the risk. I mean, even you can micromanage it as much as every day. Take a look at your portfolio at the end of every day, and assess your overall risk tolerance. Um, and then also, micromanaging each individual position is valuable too. You don't want to become overly overweight one stock. Like, let's say you have one winner that's up like 3x, since you bought it. If it was a 10% holding at first, well, now it's 30%, or somewhere around 30%. So you're really overweighted to that one stock. So it might be prudent to cut some back on that one, at least take your cost basis off the table, and then reallocate it or just hold some cash. The more cash you hold, the lower your overall portfolio volatility will be. The cash is part of your portfolio. Cash is a position. It is a position. And cash gives you optionality to buy on pullbacks in the future, okay, or to take advantage of new ideas that you might generate. So cash is valuable. Absolutely, cash is valuable. Even in a bull market, having 10 or 15% cash is not a bad thing. That's a prudent thing to have. But it's up to your style, your risk tolerance, your game plan, your objectives, right? And I'm a broken record saying all this stuff. You. It's your portfolio. It's not mine. Only you know you. But you have to be willing to stomach the shakeouts, because there will be shakeouts along the way in a bull. But pretty good chance that the bull has further to run than 1 month, right? So you should be relatively unmoved by what we've seen so far. I'm relatively unmoved, so I'll speak for myself. Okay, that doesn't mean I'm buying gold futures at 23.55 right now. Okay, because that's a whole different ball of wax, right? Physical metal in my possession is totally different than trading a futures contract. Um, okay, let's get concise here as we wrap this up. Endurance Gold 2024 plans. So number one, Endurance Gold is a sponsor of Goldfinger Capital. I appreciate their support. They help me to be able to generate these videos on a weekly basis. I'm a shareholder of the company as well. They announced news this morning, Endurance 2024 plans at the Reliance Gold Project. So it's important if you're interested in learning more about endurance, or even if you know about it, to remind ourselves how strong the gold system is here at this project. So this is in the Braylorn, region of BC. Here's some gold intercepts, some highlights of the last few years of drilling at the Reliance Project. 15.7 grams per ton gold over 24.8 meters, 8.62 grams per ton gold over 24.4 meters, 8.47 grams per ton gold over 24.9 meters. And I could go on, right? And actually, the list is much longer than this. If you go into their presentation, they have a full slide showing the highlights, and you can look at the drill plan map of the entire 1500 meter strike extent. But they outline 10,000 meters of diamond drilling at the Royal Shear Trend, which is the main trend that they've been focused on the last few years. But then they have this property wide prospecting, sampling, soil grids. These are all very interesting targets they have on the other trends, the parallel shear zones on the total property package, right? So they are letting us know that they will mobilize in May, and 10,000 meters of drilling is coming this summer from Endurance, right? So this one has been a bit of a sleeper the last year. They really lost some momentum at the end of last year with forest fires that had them halt the drill program for over a month. Also, obviously, the market environment for gold juniors was pretty challenging at the end of last year as well. So this is the company that lost its momentum, but now it looks to get it back here in 2024. The gold hasn't gone anywhere. This is still one of my favorite gold exploration projects out there anywhere in the world, and that is why I'm a shareholder of Endurance Gold. Um, MindMed short squeeze trade. So I want to talk about the medical psychedelic sector because last week was very notable with stocks, like Atai Life Sciences spiking up from 180 to 280 in 3 days. And that just shows you how powerful the moves can be in some of these stocks. Okay. These are small caps, right? 200, 300 million market caps, and they can have relatively explosive moves in very short periods of time. I like how a tie consolidated for so long throughout the first few months of 2024. It built up a bunch of energy and then broke out. MindMed started to do the same. Okay, so um, we had really good phase two results in early March from MM120 in their anxiety study. It consolidated after a 50% spike for almost a month, and now it looks like it's broken out and it's starting to make another leg higher. So I wrote this article April 3rd on medicalgold.ca called MindMed Short Squeeze, and I just highlighted that this is a very important year for MindMed and for the medical psychedelic sector more broadly. And the way the stock is acting is extremely bullish. Okay, this is a high and tight consolidation, so it's not giving anything back from its post phase two results news. Um, And shorts have increased their short position from 13% to almost 22%. So, and meanwhile, also the company has raised a bunch of money, so they are well funded. I mean, I don't know their exact current cash position, but I'm guessing it's over $200 million. So it's coming, they are in a place of immense strength with a bunch of key updates coming in the next few weeks or couple months, including the end of phase 2 meeting with the FDA, the start of phase 3 probably during the summer, and then their MM402R MDMA phase 1. MDMA is a very interesting psychedelic, medical psychedelic. It's technically a medical psychedelic. Some would argue that MDMA is not a psychedelic, but technically it's considered to be a medical psychedelic. And MDMA is said to be the first FDA approved medical psychedelic, with Lykos, formerly MAPS, getting their MDMA drug candidate approved for the treatment of PTSD, right? So, as bullish as I am on junior mining and precious metals, I'm also very optimistic on medical psychedelics. Pharmala, this is a tiny biotech listed on the CSE in Canada. The market cap is like 20 million Canadian, so not even US, okay? 20 million in Canada. And its symbol is MDMA on the CSE, so on the CSE. And they have basically built their entire franchise around MDMA and being one of the go-to companies uh, in MDMA for all kinds of aspects of the business of MDMA. Okay, that's probably the simplest way to put it. Um, so when the FDA finally formally approves MDMA for the treatment of PTSD, it could be in May, it could be in June. They have to do it by August 14th, I believe. Um, this is set to be a potential big winner. So is a tie, and so is MindMed, right? But with a tie, you're talking 300 million market cap. With MindMed, you're talking 300-400 million dollar market cap. With MDMA, you're talking 20 million, right? So the torque could be biggest with the smallest ones, right? Just throwing that out there, okay? Um, you can assume that I have a position in all three of these: MindMed, Atai, and MDMA, and I may buy or sell at any time without notice, as you can probably assume for any stock I talk about during these videos. But I usually spell it out pretty clearly. Um, and I bought MindMed literally last Monday after I made the weekly video last week. So I didn't have a position, and then I did later that day. Okay, because this short squeeze setup was just simply too juicy to pass up. Um, taking profits on a trade. So I'm just going to throw this out there as well. One of the hardest things in trading is being clear on your time frame. So for example, let's say you bought MindMed on Monday at 9:25, and then suddenly within barely more than 24 hours, you're staring at an $11+ share price. That's a big move for a stock like this in such a short period of time, right? So it is absolutely prudent to take some profits off the table. Really, how many profits you take off the table and how you manage the trade depends upon your time frame. If you're using the daily chart, well, to me, this looks like it has some more room left in it, and I would probably sell half and then put a trailing stop on the other half. Um, It also depends upon, like, is it a catalyst trade? Like, are you looking for a specific catalyst? Has the catalyst happened? You would normally sell when the catalyst happens. But if it's simply a chart-based technical trade, short squeeze trade, then you may give it some room to really work in your favor, right? And the best traders are able to squeeze the most juice out of the orange, right? And it is an art, it's not a science. Um, but I recommend having a rules-based approach for taking profits and not letting it be, oh, I'm going to ride the momentum, and then watch your profit evaporate and turn into a loss as the stock, whipsaws on you, which can be very bad for your mental frame of mind, your mindset. Trust me, I've been there quite a few times, and it will tilt you to see a big win turn into a loss, right? So these are important things to be thinking about. These are important things to be focused on and have a plan for. But you can bet that I took profits on this candlestick here. Okay. That doesn't mean that I'm still not holding a position now, but it just took some money off the table, which is the prudent thing to do. X Spaces, I'm going to have Rick Rule on Friday. I might have one other one coming up. We haven't said it yet, but we'll see. It's possible I could have two X Spaces this week. You'll hear from me if we do. And then the new map. So this, I'm going to save this for next time. This is the book that I highlighted a few weeks ago. Let's talk about it next week. I have some topics that I want to, discuss from the book, but some things that really stood out to me. But just look at this: 500,000 pounds of raw materials have to be mined and processed in order to produce a battery for an electric vehicle. 500,000 pounds. That is an incredible amount of raw materials, earth, rocks, call it what you will. But the amount of energy and effort to produce one EV battery, the movie stars in LA and Hollywood, they just want to get in their Tesla and just it comes from fairyland. Their iPhone, their Tesla, their house, all the shit they use and consume, it just comes from somewhere else. No, it's mined. It's mined, and it requires a lot of effort, a lot of energy, a lot of fuel, a lot of human blood, sweat, and tears. Um, so this is not a simple. There's no panacea for the green transition, right? The green transition. And all of the estimates, the forecasts for net zero and EV production, they've all been far too optimistic. They continue to be optimistic, too optimistic and unrealistic. Look at Tesla's numbers. They're disappointing. And frankly, Hertz is getting rid of some of their Tesla fleet. Um, it's not the panacea that it was sold to us to be, right? So we're going to need a lot of oil, a lot of natural gas, a lot of nuclear energy for a long time to come, and we're going to need a boatload, several boatloads, several container ship loads of copper over the next decade to have all the things that we want to have. Okay. Solar requires a huge amount of copper. So does wind. So do EVs. So does everything. All right. So I'm going to leave it there. We can talk about Russia, China, South China Sea next week. As always, I wish you a powerful trading week. Until next time, thank you for tuning in.